This meeting is being recorded.
Okay. Hi, everybody. This is Addison Shonland. It is March the 2nd, 2022. And I have two guests today, Michael Mooney, CEO of ACIA, Aero Leasing, and Samir Adam, Senior VP Commercial at ACIA. I hope I'm saying that right. Gentlemen, thank you so much for joining me today for a conversation about the business and the industry, I guess, and your business.
Yeah, thanks very much, Addison. Really appreciate the invite.
Thanks, Addison.
So Mick, maybe we can start with you. Tell us about ACIA.
Yeah, absolutely. So we were founded almost 20 years ago out of effectively a bankrupt airline. So our group CEO, Mark Hurst, was involved with DHL. He was finance director for DHL in Africa. And the airline that was operating at that point in time was about to experience some real trouble. And he convinced the shareholder to come in and bail them out on the basis that Mark took over the airline, which he did. And from there, he basically built out the group as we know today, which includes the leasing business, which, myself and Samir and a team of, almost 20 or over 20 people now are responsible for managing. So the lessor business was effectively established in 2004 with some excess aircraft going on lease, Beech 1900 aircraft back in the day. But as at today, we've got a fleet of almost 60 aircraft, and the 60 includes LOIs that we have out for aircraft that we're hoping to close, LOIs and SPAs that we're hoping to close in the next 2 to 3 months. But hopefully by the end of this year, with additional mandates that we're also working on right now for our customers, we should end up with a portfolio of 65 to 68 aircraft before the year is out, and that's spread out across a number of different lessees. So at this moment in time, we've got 16 lessees in 20 different countries on pretty much every continent. We don't have anything in Australia, that area just yet, but Samir is working hard on that as we speak. But our portfolio is divided into what we like to call 3 different buckets. So we've got a cargo bucket, which is a core part of our business, not only for the leasing business, but also our sister company IPR owns the STC to convert ATR aircraft into cargo aircraft. But it's a growing part of our business, and given the couple of years that we've had, it's been absolutely, it's been vital for us to have that there as kind of a core and stable base within our business. But we're also growing it, and over the last 12 to 18 months, we've added new customers, and we've got mandates from existing customers to grow even further. So this year we expect to add at least 4 new 72-500 freighters, at least that, with additional mandates that we're working on to add up to 7 more on top of that. So that's the cargo part of our business. Then we get into what has been the core of our business historically, which is long-term charter ACMI type businesses. So our strategic partner, Salent Aviation, which has a number of common shareholders, not the same shareholding, but a lot of common shareholders. We work with Salenta in order to allow them to operate for the likes of Exxon, Total, lots of the oil and gas companies throughout Africa, but also to operate for DHL. And today, Salenta operates the entire West African network for DHL, their regional network. But we have other customers, the likes of Best Fly and Air Express Algeria, who also fall into that category, whereby they're not reliant on scheduled passengers, they're not reliant on business passengers or tourism. So again, throughout COVID and the last 18 to 24 months, that's been stable business because the guys who work for these companies and the underlying contracts, they still need to get to where they need to go. Also included in there, we do a lot of work with the UN World Food Programme, the International Red Cross, Médecins Sans Frontières. So it's quite diverse within that long-term contract group as well. It's not just one airline or one customer. There's a vast number of customers outside of that. And then the final bucket is your traditional airline bucket. The likes of Air India, Pakistan International Airlines have been customers, long-term customers of ours, but we've been growing that part of our business as well. So we've leased engines into TAR in Mexico this year, and we've put aircraft into Nigeria with Green Africa, who's a startup this year. And there are other, in our growth plans, there are other more mainstream and also outside of Africa, customers who we're looking to add aircraft with over the next 6 to 8 months as we can acquire them. So that's a general flavor of the portfolio today. In terms of our assets, it's quite a mix. The core of our business has been ATR for quite a long time, and with the addition of Samir in the middle of last year, we've started looking at some larger aircraft. We, obviously have been looking at some Dash 8s, which is Samir's historical background, but it's a mix, but it's heavy ATR, which we like. We like the asset type, and because we have the STC to convert ATRs, it gives us kind of that cradle to grave life cycle management that, well, very few other lessors can do, right? So given the scope of our business being the lessor, strategic partnerships with the airlines, the part out business and the parts business that we have, in addition to the conversions business that we have, all within the ACIA Capital Group, we can manage ATR aircraft from its very beginning right the way through to part out and monetize it throughout its life. We'd like to be able to replicate that with other aircraft types, and we're exploring different opportunities to do that. But ATR will continue to be a focus. One of the things that we did last year was bring in our first E190 that will deliver to our customer Best Fly next week or the week after next, depending on release of service, but it'll be in the next couple of weeks. But our plan is to grow into that regional jet space, adding more Embraers and potentially other regional jet types, but for the minute, more Embraers. And it just gives us that ability to tap into different customers who potentially weren't there 12 or 18 months ago as we kind of broaden our portfolio.
So it's interesting you mentioned that you're going to aim Samir at Australia, which should be fun. But obviously, given the time we're in, the shall we say, the current craziness, as if COVID wasn't crazy enough, you have no exposure to Russia, I guess.
No, we don't. Our shareholders made a conscious decision a number of years ago not to invest or have any dealings with Russia or Russian airlines directly. That was a direct response to the Crimea, the annexation of Crimea, effectively. So the last week I've managed to get sleep from a business perspective. It's obviously terrible what's happening there from a non-business perspective, but there are a number of lessors out there who have some real challenges to recover their aircraft. I've had, having worked in the leasing industry for many years now, I know a lot of people who are working with the likes of AirCap and some of the other large lessors as well. And to extract that number of aircraft in normal circumstances would be a significant challenge, but to do it within a time frame of, call it 22, 23 days to basically terminate the leases and attempt to recover the aircraft is unprecedented. There just isn't enough technical people or lawyers available to these guys to be able to do it. The other challenge they're going to have is getting the airlines to hand the aircraft back. If Aeroflot or S7 or whoever it is decides that they're not going to hand them back or not play ball, whether it's in their control or not is to be seen. But if they decide that, then it really becomes a question of how good your insurance policy is. And I'm sure a lot of the lawyers have been focusing as much time on their insurance policies as their leases in the last couple of days to see where they're going to stand. So I think there's a number of things that will come to light in the next few days, but it's certainly worrying times for lessors who have exposure to those Russian airlines.
Wow. Yeah, we did something on that yesterday on our site, and these issues popped up, the ones that you're describing. The fact that you think about, you have to move something like, I think it's 20 airplanes a day if you want to move everything out on the time schedule. Where are you going to find crew? Never mind just the ground people. Who's going to want to go there?
And where do you fly them to? If the aircraft can't fly into European airspace or a lot of other places, where are you going to store your aircraft for the longer term? But I think the bigger issue is actually getting access to the aircraft, the records, getting all the statuses and everything up to date from the airline before you take it back. Like, it's a redelivery of an aircraft can take months, but doing a redelivery like this and trying to get everything ticked and tied as you terminate leases and navigate international sanctions, I'm glad we've no exposure, but I genuinely feel sorry for a lot of my friends and colleagues who are dealing with this on an hourly basis now.
Okay, we should probably move on to 2022 if we can.
Yeah.
How does 2022 look for you guys? And how did you change, as you've gone through the pandemic?
Yeah, so I think I joined ACIA right before the pandemic, and previously the leasing group and the wider ACIA Capital Group was managed by the same core management team, and they realized that they weren't putting the right focus or attention just because of purely bandwidth issues onto the leasing group or any of the other divisions themselves. So the shareholders made a conscious decision to drop in a CEO or a managing director on top of each of their business to kind of grow those businesses independently. I unfortunately picked up the leasing business, fortunately or unfortunately, picked it up right at the beginning of COVID. I had a few months to get my feet under the table and start making plans, but then those plans were significantly disrupted with the onset of COVID. Thankfully, just given the makeup of our portfolio, we didn't have as big, I suppose, a financial impact as we could have, or maybe some other lessors have had, just because we've got a large cargo element, we've got a large long-term contract element, which weren't ultimately interrupted. And then we have a number of scheduled airlines, but they were a relatively small part or portion of our portfolio going into COVID. Coming out, they're a little bit bigger. But because of that, the impact wasn't there. But either way, we continued our plans. Our growth plan was very was set out from an early stage. It was focused on growing that cargo business, as you point out, and we have strong strategic capability there. But in order to do that, we need to massively grow our team, and particularly we need to grow marketing, and that's where Samir came in. So, we've added a couple of heavyweights to our leadership team in the last year. Samir being one. We also made an announcement yesterday that Marina Litvak has joined us. I previously worked with Marina, and she's got 15 plus years of asset finance and aircraft finance experience. So we're building out for the long term. Our team went from 10 people, the leasing team, the wider group has several hundred people in it, but the leasing team dedicated went from 10 people at the start of 2021 to 20 people at the end of 2021. And we're already committed to add another 7 or 8 people by the by the middle of 2022. So there's lots of people being added, and we need to do that just to sustain the growth that we're planning and have mandated already. In terms of our overall strategy, we already had a really good strategy beforehand, which was diversify not only by lessee or aircraft type, but it was the type of mission that was ultimately underlying our lessees. So the cargo, the charter, and the schedule. So it's keep growing out more of that, bring in new customers, but with similar kind of profiles as to our existing customers, and also grow it with the customers who we've had pre-COVID. And we've got a lot of really good customers there, the likes of Salenta and Best Fly and Air Express. While some of the jurisdictions where these guys fly in and out of aren't everybody's cup of tea, it's really understanding that the risk profile around those sorts of operators is perceived risk versus actual risk. And I think COVID shone a light on that for me, whereby these are the guys who continue to pay all the way through COVID without kind of power by the hour or payment breaks, whatever the case may be, because their contracts continue to pay them. It was ultimately Exxon, Chevron, Total, BP, the UN on the other side of those contracts. So the strategy is to continue to build out our cargo business. We've got a very strong advantage in there because we have access to the STC to convert aircraft that other people don't, and the ATR is the perfect platform for regional cargo operations. And then also build out the schedule business, right? So it's a small part of our business today, but it's something that we do want to grow into. We have the opportunity with COVID to kind of, I suppose, enhance our strategy because aircraft are available a lot cheaper than they were 24 months ago. So that gives us the ability to get in, buy aircraft that are off lease, naked, distressed, and put a bit of work into them, and then put them out the other side with good customers and at good lease rates. So that's our strategy in a nutshell.
The interesting thing here, obviously, is the pandemic has been very good for cargo, e-commerce kind of thing. So that has turned out to be a strength in a time of craziness. You mentioned the E190. What other airplanes? I mean, you're talking about going more into the regional business, and of course, we saw Chorus and Falco get together this last couple of days. That's been making a fuss, getting some attention. Are you going to be moving more into the regional market?
I think we're already in the regional market. I think the question is, are we going to move into larger regional jets and
You're right.
start competing
The
with the likes of
crossover
the
market.
crossover jets? Yeah, like I mean, there's some really interesting opportunities in that crossover market. But you know, we've been owned by the same shareholders for the last 20 years, and they're under no pressure to spend money, and they put us under no pressure to spend money either. So if we don't find the right aircraft or the right deals, we don't do it. But at this moment in time, we are seeing some really interesting deals in the crossover space. We think there's a shift to down gauge aircraft capacity away from some of the narrow body aircraft into the regionals, and a lot of the airlines had moved away from these regional jets previously. I think they're realizing or recognizing that they when it came to COVID, they were missing, you know, something in their own arsenal or portfolio to be able to deploy when, you know, demand isn't as high as it was pre-COVID. So we are seeing a shift or a move back into the crossover space, and the likes of the A220 coming into the market as well. Another fantastic aircraft. Other airlines are going to start looking at that. Not every airline can afford an A220. But they will look at secondhand E-jets. They will look at, you know, secondhand E1s or you know, larger CRJs, whatever the case may be, which they can afford. So we're seeing opportunities in those spaces. Samir, I don't know if you want to chime in on that particular aspect as well.
Yeah, thanks for that, Mick. And I think that one of the key aspects there, the theme here really, Addison, is that, you know, Asia is not ready to jump into 50, 100 aircraft transactions. It's kind of the formula that has got a lot of other colleagues in the industry facing some challenges at this time. So our view is conservative, calculated, and working with those operators that we have a high degree of confidence on, that can navigate themselves through some of the challenges, such as the pandemic, such as what's happening now in Europe. When you look at the A220 as an interesting point, just, you know, at some point that aircraft also becomes available on the used market, and we're not that far away. If we're thinking of a 5-year plan, probably the back end of that 5 years is going to be some used A220s starting to hit the market at some point. The 190 is a great platform right now. We've done extremely well with just the first aircraft, got a lot of attention, and that has opened up about a half a dozen other opportunities for us. And it really comes back to taking that commercial strategy that we've been successful with before and augmenting it throughout COVID, looking at how we're going to build with other types, getting into the scheduled operator side, you know, albeit to a certain extent where it's one step at a time, but to a certain extent where we're going to take a leap on a particular type. So we've taken a leap with the 190, but at the same time, we're not going to go out and do a 10 aircraft deal with anyone. We want to understand the right operator, 2 or 3 airplanes here, 2 or 3 airplanes there, and it's going to be calculated growth. So I think that's really what 2022 into 2025 is going to set up for either Asia and anyone else who's looking to ensure that they've got some element of risk mitigation in the strategy.
Something that occurs to me, you have obviously a propensity for freighters, and now you're looking at the crossover size. What do you guys think of the Embraer 190 freighter? Nudge, nudge, wink, wink.
Like, I mean, I think we will look at any opportunity, right? So for us, we're buying into the 190 because there is a freighter opportunity at the end of it. It gives us that second and third life capability. We're buying it for second life, and third life is the freighter capacity. So it wasn't a fluke that this was the crossover jet that we first put our mind to. So yes, we will be looking at freighter opportunities for it. But for now, we're focused on PAX. The aircraft we're picking up are, you know, somewhere anywhere between 10 and 14 years old. For us, that's perfect age. You can run out 5, 6, 7 years on a PAX lease, and then you've got the opportunity to either continue it in PAX, but maybe with a different customer, different region, or you can convert it at that point in time and try and get another 10 to 15 years worth of value out of it. So yeah, absolutely, it's something on our radar.
So what you're saying is that you do have time horizon to develop your own STC.
It's not my core business. It's certainly part of our wider group business is STC management. We didn't develop the STC for the ATR. It was actually the OEM STC that we acquired several years ago.
Okay.
For the ATR. So it's not that we don't have the core strength for it. We do have the capability within the wider group to develop and manage STCs in the long term. But as the leasing business, our core focus is to acquire aircraft for lease. if we need to convert those aircraft, we will look to the market for STCs. The market may include our own company or sister company to develop that STC. But I think there's going to be enough. I think there'll be a number of people developing it, including Embraer themselves, I'm sure, to provide that kind of second or third life for their aircraft as well. Because for them, a freighter aircraft means there's one less PAX aircraft, which means they can sell more PAX aircraft, E2s effectively. So
now, when we met in Dubai, feels like 100 years ago.
Yeah.
There was a great thing that you guys came out with, the hybrid electric idea on the ATR. The sustainability thing obviously is something that everybody's hoping it continues, but of course now with the current madness, who knows what, maybe pollution isn't such a big issue now. But the bottom line is, at some stage, hopefully we get peace and we get back to a new normal, which I thought we were never going to have to worry about another new normal after COVID. But here we are, we have a new normal. What can you tell us about the progress on your sustainability strategy since we saw the announcement in Dubai?
So maybe I'll take that one. In terms of the initial discussions with Universal Hydrogen, and to just be very transparent, we are looking at all options. So Universal Hydrogen is the first one that we've engaged with, but we see that space is going to develop, and at some point there's going to be sufficient demand to drive the change in the industry. Now, other factors such as the timing of full COVID recovery, what's happening on the European front with Russia, and any other earthquakes that we might see in terms of over the next 5 years, that will affect overall timelines. But I think that there's a high degree of interest from the industry to adopt those technologies for various reasons, either whether it be the environmental argument or also just the sustainability and from an economic sustainability standpoint. From our perspective, we want to be ready. We want to be one of the first in line for when that demand happens. So we are taking a strategic view on that. In terms of the overall progress, we'll leave that for the developers themselves, Universal Hydrogen and the others, to provide their updates. But we're still quite confident in what we see. What has happened in the last few weeks and since the Dubai Air Show, there are now conversations happening with airlines themselves. So we are actively engaged with airlines who are looking to commit with us into the program itself. So we'd be bringing a portfolio of 3, 4, 5 customers who would actually link up with us. Part of them would be the fleets that we have with them, or part would be their fleets that either purchase or lease from others. But they would be looking to work with ACIA on this to be able to access those technologies and those conversions into hydrogen. So I think that there's some good excitement. Right now, it may be overshadowed with other global factors, but I don't think the momentum is taken out of it. And I would expect in the next couple of weeks, maybe at the various events like ISTAT and what have you, there'll be more updates coming out from the hydrogen providers and in terms of what's the development schedule look like and how is the progress in terms of overall development toward first flight.
Yeah, I think the OEMs, like the mainstream OEMs, have a lot to answer for here, right? So you've got a number of startups, be it Universal Hydrogen, Zero Avia, developing these technologies effectively out of a shed, right? A hangar at different airports. They're well backed now, but they weren't. But they're asking themselves, how can this be done? Whereas the traditional OEMs are saying it can't be done, right? So we've had, myself and Samir, we've had very vocal discussions with the OEMs, pushing them to, because they're asking us, what do you think about this? And it's like, my real thoughts are, you guys plus your engine manufacturers should be out there giving me solutions. I shouldn't have to be, or Universal Hydrogen or Zero Avia shouldn't have to be out there trying to develop this without the resources that you guys have. So we've been pushing that message pretty hard since Dubai, at every opportunity we get, and we meet with the OEMs very regularly. We have calls with them every other week, as well as in-person meetings whenever we get to Toulouse or Toronto, right? So it's we're pushing hard from that particular angle, because it should be them taking the lead on this and not these smaller entities.
That brings me to a quick question here. Obviously, there's the interim step of SAF, and your airplanes are all SAF capable. So, right?
They are, maybe don't quote me on this, but a conversation but a conversation I had with an OEM said that even if they wanted to do the first delivery flight on all of their aircraft this year, they couldn't obtain enough SAF to do it. Right, so SAF is another one of those difficult to implement type of strategies. Plus, it doesn't answer the problem. You're still burning carbon, right? So it's better. A little bit better, but you're still burning carbon. And I think, ATR's announcements back in Dubai as well with their Corsica and the new Pratt engines, like even there, you're talking about 3 to 4% fuel burn savings. And that's if you get the right environments, operating conditions. So really what they're saying is this is the best we can do. Whereas what we're telling them is it's not the best you can do. You can do a lot better than that. Look at what the likes of Zero Avia and Universal Hydrogen are doing. That's the best you can do, is try and develop these solutions. They think they can get it done with their relatively limited resources compared to yours by 2026, which is a very ambitious schedule, right? I want to believe it can be done by 2026. They're saying it can, but as Samir says, let those guys answer the timeline questions themselves. But if you had the bigger OEMs with their design departments, with the engine guys coming on board as well, there's no reason why they couldn't push to make that 2026 ambition more realistic. So they need to be pushing that.
I think maybe to add to that, it's almost the right time for somebody to do something very different. And whether it's the time where 787 was launched, or it's the time when the C series, eventually A220 was launched, I mean, isn't this the right time for the OEMs to take a very close look and say, it's time for a new turboprop? And I think that, if Embraer makes that decision, that'd be one to watch for sure, because they have an opportunity to go completely clean sheet, start from the beginning, set the new parameters in terms of what the turboprop is supposed to do. And that'll be the catalyst to be able to drive larger aircraft into that direction. Because at this stage, we all know OEMs are big machines. It takes a lot of work and a lot of cost and a lot of time to get anything done in terms of major shifts. And it takes a Neo engine or Pratt & Whitney GTF to go, the whole industry has to look and say, we have to do something, right? So, would the Max or the Neo have been launched if Bombardier didn't launch with the C series? Arguably, maybe not, right? So does Embraer come out with a turboprop today that forces the industry to rethink about how they come out with the hydrogen solution? I think that, in my mind, if I was to take a bet today, I think that's where the money has to go.
That's fascinating.
I think coming back to your original question on SAF, like SAF is evolutionary, but what we need is something revolutionary, right? Evolutionary just isn't going to cut it anymore.
All right, gentlemen. Last thing, 5 years. Looking out 5 years. Who wants to tell me what's going to be with the leasing market, and how do you see we should all survive World War III? We already. I mean, it's. I don't mean to joke when people are, politicians are threatening. So.
Yeah, I think. If you had asked that question 3 years ago, I don't think any of us would have forecast the 3 years we would have had, right? So it's really difficult to forecast even 12 months out. But I think there's a couple of clear patterns for me, particularly from a leasing perspective, be it regional or larger scale leasing. There's going to be more consolidation, and there's lots of leasing companies out there that have relatively small portfolios that are going to end up joining together. We can see that with the largest, be it GCAS and AirCap, happening. Avalon SMBC and Goshawk. Who knows who Avalon's going to buy next? I'm sure they've got some things on their horizon. And then in our space, you've seen Falco and Chorus tying up as well with Brookfield backing both parties. So I think there's room for more consolidation past that. But there's going to be more of that, particularly in the next 12 months, as people kind of shore up their balance sheets and try and make the most of what are perceived to be scale efficiencies, but I think are quite difficult to achieve, particularly in the regional space. On the airline side, I think we haven't seen the full pain yet from COVID. There's been a lot of pain. I still think there's going to be challenges as airlines try and get aircraft back into service. Again, as guys who are buying planes and converting planes right now, getting spots in MROs is really, really difficult. So airlines trying to get their aircraft reactivated and out the door to work for this summer, so they've got some cash, is going to be a challenge. We're seeing that across the board. So I think, you know, we're still going to have what I hope is a good summer, depending on what happens with Russia and everything else. But hopefully we can still have that bumper summer that everyone is expecting. But I still think it's a very difficult winter through 2022 and into early 2023. And only then will we have the full sense for the impact of COVID, and at that point the impact of what's happening right now with Russia and Ukraine. Longer term, I don't have a crystal ball. I don't even want to try and guess what's going to be in 5 years. What I can say for us as ACIA, and Samir, you know, alluded to it, our strategy is slow and steady. So build up 5, 10, 15 aircraft per year if the opportunities are right. If the opportunities aren't right, we'll keep managing the portfolio we have. There's enough work, trust me, there's enough work going around just in managing the 60 aircraft we have today. So that's my views. It's not giving you that crystal ball answer, I'm afraid, Alison, but that's my views on what's coming in the next 12 months more than 60 months.
I think maybe just the one thing there that is the unanswered question for a number of years now is the 50-seat market in the US. For lessors, that's going to be a very interesting problem to face, because, you know, what operator at this stage can convert a need for 150 seaters into a firm aircraft order? Very few large operators can do that. But from a lessor mindset, you know, what has been for the last 5 years focused on the 350s and the 787s and sort of that segment, and getting now to the 220s, there is going to be more focus on the regional market, because there has to be a solution and there's opportunity there. Those 50 seaters can only run for so long, whether you're talking ERJs or CRJs or whatever else comes in between. But does it force demand on the turboprop to be able to be a replacement? Is there something else that comes along on the regional jet side? Consolidation is one thing, but you still have the U.S. market is very hungry for light aircraft. I mean, you can't just upgauge and start to consolidate between the 3 or 4 major carriers. You still have to be able to serve those smaller markets, and at some point, the equipment just won't run as long. So I think that's a problem that has to be tackled within the 5-year horizon.
Fascinating.
Yeah.
Gentlemen, thank you so much for your time.
Thanks, Alison. Really appreciate it.